Tokyo Reuters Asian stocks fell on Wednesday after a slide on Wall Street overnight while the dollar was on the defensive with tensions in the Korean peninsula showing few signs of abating. Spread bettors expected European shares to follow suit, forecasting Britain's FTSE 2 opened 0.3% lower, Germany's DAX, GDAXI down 0.4% and France's CAC, FCHI off 0.5%. MSCI's broadest index of Asia-Pacific shares outside Japan, MIAPJOOOOPUS fell 0.7%. Japan's Nikkei N225 stooped to a 4-month low and was last down 0.2%. Australian stocks lost 0.4%. Shanghai SSEC dropped 0.25% while Hong Kong's Hang Seng HSI retreated 1%. South Korea's KOSPI KS11 was down 0.35%, with auto stocks dropping on concerns about their sales in China. The index has fallen in the past 4 days. Shares in South Korea are still closely eyeing further risks from the north, said Ru Yong-seok, a stock analyst at KB Securities in Seoul. Simmering geopolitical tensions following North Korea's biggest ever nuclear test on Sunday kept risk appetite in check. Pyongyang is ready to send more gift packages to the United States, one of its top diplomats said on Tuesday. Against this backdrop, U.S. stocks sank overnight, with the S&P 500 (SPX) stumbling to its biggest single-day loss in about 3 weeks. Risks emanating from the Korean peninsula have a broad impact particularly in East Asia, but after a few days the effects begin to fade in other regions, like those of emerging markets, said Kota Hirayama, senior market economist at SMBC Nikko Securities. Emerging markets are likely to shift their focus to the European Central Bank policy meeting on Thursday and then the September 1920 U.S. Federal Reserve's Open Market Committee FOMC gathering, Hirayama said. The steady flow of foreign investor funds into emerging markets have shown signs of abating lately. Eurozone and U.S. monetary policies could prove crucial in dictating these flows. The dollar posted losses, notably against the Japanese yen and Swiss franc, reflecting the risk-averse mood in the broader markets. Investors are keen to see whether the ECB will send a message regarding the timing of an exit from its ultra-loose monetary policy. Few expect the Fed to tighten monetary policy this month and will focus on whether it leaves the door open for a rate hike in December. The greenback was down 0.1% at 108.690 yen JPY after losing about 0.9% overnight, its biggest one-day drop in 3 months. The Swiss franc was steady at $0.9548 per dollar CHF, having gained more than 1% so far this week. The dollar suffered further after Federal Reserve Governor Lael Brainard said on Tuesday inflation was well short of target, in the clearest signal yet the central bank is getting more dovish in the face of weak data. The dollar index against a basket of 6 major currencies, DXY, was little changed at 92.313 DXY after losing 0.4% the previous day. The euro was flat at $1.1913 EUR ahead of Thursday's ECB policy meeting. Government debt benefited from the risk-averse mood, with the 10-year U.S. Treasury yield US 10YTRR extending its sharp overnight slide and falling to a 10-month low of 2.054%. In commodities, safe haven gold hovered near one-year highs as the dollar eased and flight-to-safety demand remained robust thanks to the North Korean risks. Spot Gold XAU was effectively flat at $1,337.56 an ounce after touching $1,344.21 overnight, its highest since September 2016. Crude oil prices edged lower after the previous day's rally ran its course, with focus being drawn to Hurricane Irma moving towards Caribbean shipping lanes. OR crude had surged on Tuesday as the gradual restart of refineries in the U.S. Gulf that were shut by Hurricane Harvey raised demand. U.S. crude future CLC1 was down 0.2% at $48.57 a barrel, after climbing 2.8% overnight. Brent LCOC1 fell 0.4% to $53.16 a barrel following a gain of nearly 2% on Tuesday. Copper on the London Metal Exchange CMCU3 was down 0.2% to $6,887 a ton as profit-taking nudged it off a 3-year high of $6,970 set the previous day on robust Chinese factory growth. METL reporting by Shunichi Oshiro, additional reporting by Dahika Minsole, editing by Richard Borsuk, Srinivara Namor, standards to Thomson Reuters Trust Principles.